Hey guys, welcome back to the YouTube channel. So before we get into this video, it's Friday, so that means our weekly forecast video will be coming out in 2 days. So we do a video every weekend before the market opens for that following week. So we'll run through a handful of pairs and say our bias and where we think that pair's heading for that coming week. So hit that subscribe button, turn on the notifications so you're notified when we upload that video, and let's get right into this video. So guys, this video is going to be just about time frames. I have so many people ask me what time frames I trade and what the best time frame is and all that. I'm sure you're all wondering what time frame I trade, and the answer to that really guys is all of them. I literally trade all of the time frames. I don't really understand when people say, oh, I trade the 1 hour chart, because why are you limiting yourself? There's so many time frames. Why don't you just use them all and maximize your potential, you know? So I'm just going to run through what I look for on each time frame. So I start with a monthly. Let's just write this out. Weekly, daily, 4 hour. I sometimes do the 2 hour, but I'm not going to put that in here because it's basically the same as the 4 hour. So 1 hour, 30 minute, and the 15 minute. So guys, this is what I look for on the monthly time frame. I'll start on the monthly time frame, and all I have on the monthly time frame is key levels. The weekly, we're going to go through this step by step in a minute on a chart, so you understand it thoroughly. So the weekly also key levels, but trend lines as well. So down to the daily, I also use trend lines. Then this is where I use Fibonacci as well, and also market structure. So if you haven't watched my previous video, I've done a video about market structure, so go check that out if you haven't already. 4 hour, I'll use Fibonacci, market structure once again. I'll also use candlestick patterns and confirmation and trend lines on the 4 hour as well. So the 1 hour also trend lines, fib, candlestick patterns once again, and confirmations, if you will. So it might sound a bit confusing at the moment guys, but I'm going to go through it with you in a second. So on the 30 minute and the 15 minute, I'm just looking for candlestick patterns and confirmations. So let's just copy and paste that down to the 15 minute. So guys, let's just spread these out. Entries. So what I'm doing, I'm looking at the monthly, the weekly, the daily to get my bias, whether that's short or long. Then I'm scaling down to the 4 hour, the hour, the 30 minute and the 50 minute to get entries. So monthly I'm using just key levels, the strongest key levels, the psychological round figures, because these are the strongest, and this is where price is going to reverse from. So weekly I also have key levels, so these are normally quarters or halves or sometimes round figures as well. So you can see my monthly key level here is 0.900, weekly key level 0.88750, so a quarter, weekly key level 0.8750, so half. So I normally keep my key levels on for like 6 months before I need to change them again, and it's the same if I've got like a weekly trend line, I'll keep that on for some time as well. So once you've got your key levels on your monthly, weekly, yeah, you can leave those on for quite some time before you have to redo them. So the daily time frame, I would also use trend lines, and this is where I'd incorporate Fibonacci and look at market structure. Obviously I'll take into consideration the market structure on the weekly as well, but I'm looking for entries on these lower time frames now. So market structure on the daily. Then on the 4 hour, this is where I'm really looking for entries. So Fibonacci, market structure, candlestick formations like patterns and stuff like that, and also using trend lines. The 1 hour, trend lines, Fibonacci, candlestick patterns, confirmations. So these 4 here, like I say, these are where I'm putting them all together and looking for entries. They all line up. So of course when it's like when the hour is going to be closing, the 30 minute and the 15 minute also close on that same hour as well. So you can look at the hour, the 30 minute and the 15 minute and see if they all line up. Same with the 4 hour. Once that 4 hour closes, at one point they'll all be closing at the same time. So that gives you a better confidence to actually trade. That's why I don't really understand why people just just the lower time frames or the hour. So this is just my way of doing it, guys. I found this to be the most effective, and yeah, I've had quite good success doing this. So I'm just going to run through a trade that I took on Wednesday this week and show you how I used all of these time frames and what I look for and how I matched them all together, if you will. So trading all time frames like this has like a couple different phrases. It's usually referred as multiple time frame analysis or top down analysis, just in case you're wondering. But anyway, let's jump into this trade that I took, and I'm just going to show you a second on the Discord. So yeah, guys, this is a trade. I'm just showing you how I posted it in the Discord here. So it was the 3rd, which was Wednesday. Euro pound long, stop loss 88,780, and so on. And also I write it in my journal and share my journal with the chat, so people can see why and try and understand why I took the trade, and hopefully they can start noticing these kind of setups on their own. So by the way, if you are wanting to join this chat, you can join for free. There is a free part to it, and yeah, we'll answer your questions and all that, and we don't expect nothing from you. So we can all get involved and try and help you along your trading journey. But anyway, let's get back to this trade, and let's start running through it. Just going to delete this a second. So guys, starting from the monthly time frame. So as I said, I just use the key levels on the monthly time frame. Let's just delete all of this a second. So last month we spiked up to this monthly resistance 0.900. So we were coming back to retest this area, this weekly support 0.8875. So broken. See, we had a bit of rejections here on this level. So we've broken up, and I was waiting for a retest of this weekly support to have like a little bounce back up to this monthly resistance. So straight away I know that I wanted to be taking longs because I'm expecting this retest of this key level in this area. So I'm using the monthly time frame there to get my bias. So dropping down to the weekly, the same key level, but we didn't really have any trend lines here. So that thing I had wrote up, of course you're not always going to be able to find trend lines in Fibonacci's, but that's the sort of things I look for on each time frame. So dropping down to the daily time frame. So looking at the candlesticks now, you can see this was the 2nd of June. We had this nice pin bar off this weekly support. You see this candle here. So this is a great reversal sign. You can see, looking at market structure as well, this was on this little mini uptrend. We had a high here, higher low, new higher high, and you can see this area here was the last high low. So I had this mapped out on my chart, and I was waiting to see if this area could be broken or this was going to hold. So if this was going to hold, I was expecting at least some sort of bullish momentum, and especially going with the monthly and the weekly key level as well. So that's what I was looking at on this daily time frame, this pin bar here. It's a great reversal sign, but obviously if it's just in the middle of nowhere, say it was like in the middle of these key levels or something, I wouldn't be taking that. It's only because off these key levels that I'm interested in it. So dropping down to the 4 hour. So we did have this this left shoulder here, this head. So I was taking this into consideration. This is why I had my take profit. I think it was at 0.8980. 0.8980 right there. So why did I have that? Well, we had broken out of this ascending trend line, as you can see here, and I was expecting this trend line to get retested, and obviously this right shoulder to be formed. So this was just like an intraday trade up to these levels. But let's drop down to the 2 hour now and see what I was seeing. So this is where I'm incorporating candlesticks and candlestick patterns. So right here, what do you see? You see this inverse head and shoulders. So this left shoulder, this head, and this right shoulder. And this is where I put on a little Fibonacci as well. And you can see we tapped this 78.6 perfectly. So once we rejected that, we stayed above this last high low. We tapped into this weekly support, and we filled in this 78.6 retracement, and also made this inverse head and shoulders right shoulder. So this was a great entry for me. Dropping down to the 1 hour, as I said, I look for candle confirmations here, and you can see everything lines up. We had this 2 pin rejection to the downside here in these levels, so this was a great sign, adding confidence to my trade. This nice pin bar here off this level. So dropping down to the 30-minute, you can see once again, taking into consideration everything that I've just spoke about, looking at the market structure on this 30-minute as well, you can see we've broken out of these low highs here and made this new higher high on this 30-minute time frame. So price coming down to this area, being a new higher low, just expected that price is going to make a new higher high, and as I keep saying, going from the higher time frames to give you the bias. So it's just about adding confidence, guys. You can see all of the time frames link into one another. You can see here on this 15-minute time frame as well, this nice 2 pin rejection into this area, and this area here, the 0.8880 level, was this last high low. Over here you see that. So you can see it all adds together. I'm adding all of the confidences together, getting the bias from the higher time frames like the monthly, as I said, off this weekly support level. Same with the weekly. As I said, we do sometimes trade trend lines on the weekly, but there was no trend line here on the weekly. So the daily, we did have this trend line that we had broken out of, but I knew we were still in an uptrend if we couldn't break this higher low. So I was expecting price to come into this area, make this right shoulder and retest this trend line. So I was actually Thursday, I was actually looking to get in a short trade here, but you can just see the price action. There was no like rejections. You can see price just moved sideways and it broken out, and what I was waiting for then is price to come up back up to this weekly resistance and show me some sort of sign for rejection there, and to make this third touch of this trend line over here, to then take this trade back down to this key level. But anyway guys, I hope that doesn't sound too confusing. I would encourage you to start looking at the higher time frames and to give you the bias. You're going to have more success with your trading following the higher time frames, and obviously you can take my approach if you will. So even if you're just drawing on your key levels on the monthly and weekly, it's going to give you like the key levels on the monthly and weekly are basically like the foundation to your charts, and it's helped me massively. So if you want me to run through how I get my key levels, give this video a thumbs up and comment below, and if you're not already, please subscribe. Any questions you have regarding this video, I know it might be a bit confusing, especially when you're just starting out, leave those comments below as well. I'll be sure to get back to you, and yeah, we'll see you on Saturday or Sunday for our weekly forecast video.